Hi, Robbie Wilson. Happy holidays, Merry Christmas, Happy Hanukkah. December 13th, I want to do a final follow up on crude oil, and I'm going to get to that chart right now. So, what you're looking at is the February contract of crude oil. As I explained before, this long term pivot, this 91.52, you see coming into here, and it's going to be 70.33. Let me get to it. We'll call it 69. There's the 722. So as I mentioned before, anytime that we get above it, we run. And so when I did this back in July, this was the run right here. So here is this, and then we had the run up, and then the high here, I said it would go to, once it breaks the 70.33, and we had a high of 95.03. I mentioned in a shorter duration that we would end up pulling back because we were way overbought. Well, we've pulled back a lot. We've pulled back into this range, the 62 by, let's call it 71.40. Current price 69.40 in real time. And it should bounce from here and end up going back up and retesting these highs. At the end of the day, we have a situation. Let me get out of that real quick. And I got to get over here and cancel that. At the end of the day, what's transpired is we went from very low supply and a demand that was starting to weaken. Now we have weakening demand that's much greater around the world, and then we got supply on. We have been buying from our adversaries. We took away the sanctions in Venezuela. They put in about 20 million barrels, and the rest is Iran and Nigeria. And that has put back on about 34 million barrels of oil. And so between demand weakening and supply growing, we're here. But from here, we should go back up into this, what I'll call the high was the 95.16. From there, I'm not sure. No one is. At the end of the day, we could get up into this area here, this 112. The way I look at this and walking forward from using the historical past, this could be August of 2024 or something like that. OPEC has been cutting as demand is dropping. In our last OPEC meeting several weeks ago, they cut 1 million barrels. The following day, they cut another 1.2. That's OPEC plus 1, which it's odd that we're seeing this kind of supply, very low demand, price still stuck here. So again, I do believe that we run back into the highs. May not be the 112 until next year, but we're certainly going to run into this right here, 94.61. And that does take time. So we use price, time, momentum. The duration, again, I think will be, let's just call it the end of this summer of 2024. And that's what I've got for you. So if this transpires like it did when I called it back in July 14th, when we were around 70.10 and ends up going above $95, got overbought, pulls back, and then all these things that I've just mentioned with demand and supply. It is a very difficult market. Crude has always been a very difficult market to project. I'm sorry, this keeps coming up. But at the end of the day, OPEC is not our friend, and that's the bottom line. If demand continues to weaken, they will continue to cut supply and continue to cut supply, just as they did in a 24-hour period of time. The higher crude goes, there's food, there's everything else that goes with that. Things are just going to stay more expensive for a long time. I'm going to rewind the tapes from 1972 to 1982. This similar thing happened with Arthur Burns. He was the Fed chair, like what Jerome Powell is now. He would raise rates, lower rates, raise rates. He just didn't know what to do. In his defense, he'd never seen anything like it. No one had. And now we have a similar situation. The CPI went up to 9.1. We've pulled back into the 3 handle. And that may just be a pullback. We may get another push. Right now, the Fed is on pause. This happens to be the day that Powell will make his decision, and that starts at 11 o'clock Pacific time, and it'll come out. And the consensus is leave, in other words, pause. It's going to be the Q&A after that that we'll see how the market reacts, how crude reacts, and everything else within the marketplace is going to react. Rates mainly in dollar is what I always look for. And I'll end on this. If I get the dollar right and interest rates right, I'm going to get a lot right. If I get them wrong, I went out of the market, and that's what stop losses do. And so that's it. Have happy holidays, and that'll be all for today. Robert Wilson, Remote Trading Room, LLC, Robbie Robert.